Ladies and gentlemen, good day and welcome to Associated Alcohols and Breweries Limited Q3 and FY23 earnings conference call hosted by Valorem Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chaiti Gujarati from Valorem Advisors. Thank you and over to you, ma'am.
Good afternoon everyone and a very warm welcome to you all. My name is Chaiti Gujarati from Valorem Advisors. We represent the investor relations of Associated Alcohols and Breweries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the third quarter and 9 months ended of the financial year 2023. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Tushar Bhandari, Whole-Time Director, and Mr. Ankit Agarwal, Chief Financial Officer. Without any further delay, I now hand over to Mr. Tushar Bhandari, Whole-Time Director, for his opening remarks.
Good afternoon, everybody. It is a pleasure to welcome you to our earnings conference call for the third quarter and 9 months of the financial year ending 2023. It's always been a pleasure to interact with all of you. I will first like to give an update on the macro scenario around the industry and then will take you through the operational performance and then will hand over the call to Mr. Ankit Agarwal, CFO of the company, for discussions on financial performance which we reported yesterday, and then we will open the floor for Q&A. The consumption and the growth story of India continued during the quarter, supported by the festival mood across the country. During the third quarter, the company deployed an aggressive strategy to push sales in quest for higher market share, resulting in lower sales realization. This move will help us to maintain our leadership position in Madhya Pradesh and consolidate our brand positioning in the market. Unfortunately, inflationary pressure continued to be severe during the quarter for critical inputs like rice, wet resin, coal. This was partially mitigated by the ongoing operational improvement measures taken by the company. EBITDA margins were lower due to lower sales realization and inflationary pressure on the input material. Operational headwinds are also expected to remain in the fourth quarter of the financial year, with rice, glass prices expected to remain at an elevated level. We are pursuing price increase and continued with our operational improvement measures to minimize the impact. We are delighted with the announcement of the new tax slab announced by the Honorable Finance Minister of the country in the recent budget, and hopeful that the increase in disposable income in the hands of taxpayers will help the business of the company in the long run. Further, on the progress of ethanol capex project, the same is in full swing, and the upcoming plant with a capacity of 40 million liters per annum is expected to start commercial production by May 23. Lastly, the stock exchange has given the NOC to SEBI on the mergers with Mount Everest Breweries Limited, and we are awaiting their approval. With that, now I hand over the call to Mr. Ankit Agarwal to take us through the financial performance of the company.
Thank you, Tusharji. Good afternoon, everybody. Let me take you through the financial highlights of the third quarter and 9 months ended financial year 23. For third quarter, the net revenue from operation was around 185 crores, which increased by approximately 13% on year-on-year basis. EBITDA was reported at 17 crores with an EBITDA margin of 9%. Profit after tax for the quarter stood at around 11 crores with a PAT margin of 6%. Our segmental sales volumes are IMFL volume was around 15.6 lakhs cases with a growth of 62% year-on-year basis. IMFL proprietary was around 3.9 lakhs cases representing a growth of 51% year-on-year basis. IMFL licensed was around 5.46 lakhs cases representing a growth of 31% on year-on-year. Our merchant ENA sale was down by about 47% and stood at around 45.9 lakhs litre. This decline was primarily due to higher internal consumption of ENA for our own IMIL and IMFL. For 9 months of the financial year 23, our operating revenue stood at 517 crores, which is an increase of around 41% on year-on-year basis. EBITDA stood at around 48 crores with a EBITDA margin of 9%. Profit after tax was reported at around 32 crores with a PAT margin of 6%. Now, with this brief overview, we would like to open the session for question and answers.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and 1 to ask a question at this time. Participants who want to ask a question may press star and 1 now. We have the first question from the line of Saket Kapoor from Kapoor Company. Please go ahead. Mr. Kapoor, I have unmuted your line. Kindly proceed with your question.
You can hear me now?
Yes, sir. Please proceed.
Yeah, namaskar, sir.
Okay.
Sir, as you mentioned about the inflationary trends in the raw material basket, if you could give us some more color how the current prices are trending in terms of coal and the rice part. What do you foresee in the coming future? I think the coal prices have corrected significantly. So
yes.
When are we going to reap the benefit of the same? And how are the margins? What steps are you taking to improve your margins? You spoke about penetrating the market with increased sales. Yes, sir, please.
Yeah. Good afternoon, Saketji. Saketji, there is an inflationary pressure primarily in terms of the grain, which is a major grain and packaging material. And as you rightly said, that coal has supported and is slightly on the downward trend. So in the rice and in grains, we see an upward trend in the market. And with the more number of ethanol plants coming up, so the demand for the grain will increase, and that might lead to increase in the price. And how we are mitigating that is we are trying, next year the price approval we will have to take in the April. So we will try and take an increase in the price in whichever states we can. And to a certain extent, almost 30% of our business of our top line constitutes of sale of ENA. So the price increase in the grain has already been taken care in the sale of ENA, and we have increased the price of the ENA. But wherever the IMFL and IMIL is concerned, we will try and take the price increase like something in the mid of the year we've done in Kerala, and we've spoken to the Kerala government and they've foregone the turnover tax, so which is given the additional margin to the company. So like that, we are talking to various states for a price increase. But apart from that, on the packaging material side, though the packaging material of say corrugated boxes and others have reduced, however, the price of glass has increased substantially, and PET is also slightly on the increasing trend, which will support us and which will go down. So that is happening on the front. Plus, apart from that, we are also trying to get into innovative packaging and trying to see how we can help in reduce the cost by either decreasing the weight of the bottle or introducing PET wherever we can. So that's the mitigation strategy which we've taken. And plus on the purchase side also of the grain, we have started buying directly from the mills to avoid the brokers, so that the margin is all the broker margin also comes to the company. So these are the few steps which we are taking to mitigate these pressures, within line with the focus of increase in sales substantially. So as you would have seen that the sale of all our products have seen a substantial increase from last year compared to this year.
Sir, if we take this ethanol part of the story going ahead, so we have the sales the sales realization at higher prices, and there has been last time also an upward revision. So factoring that and the current grain prices, how are your margins shaped up for the sales participation to the ethanol blending program, and what portion of your sales are directed?
The margins would be almost similar to the margins which we have in terms of which we had discussed at around 8 to 10%, and that the new thing in the ethanol plant would be completely on the sale of the ethanol side. And government is also considering, with an increase in price of coal and the grain, the government is also considering an increase in the price of ethanol, and the government is also considering an increase in the price of transportation of ethanol. The government is also taking care, because these questions have been raised in our All India Association meeting, and we discussed with the government. And now the priority of the government is to increase the ethanol blending from 10% to 20%. So they are trying to mitigate all the increase in the price by increasing in the price of ethanol.
Correct, sir. And sir, sir, on the coal part, sir, of the total power, and I think the power and fuel mix only, the coal is factored. 22.57 crore is the power and fuel number. So
yes,
therein only we have
coal and electricity.
Yeah. So how will this line item shape up, sir, with the current coal prices? What kind of reduction are we expecting going ahead?
So coal is on a downward trend slightly. So what peak we've seen a slightly downward trend around 5% from the peak. So we might see a further slightly decline in the coal price.
Okay, and we are sourcing it domestically only. That thing.
Yeah, we are purchasing it.
That is the e-auction route. How is the pricing done? When 5% is what we are going to gain going ahead.
Yeah, 5% is slightly correction has already happened, and further we are expecting around 1 to 2% decrease in the price. And plus, apart from that, the procurement is either through brokers or through direct government allotment. So we have both the models. We have got government quota also, direct allotment from the mines, and plus we buy through brokers also.
Okay. Sir, can you quantify the number in terms of the total coal requirement on a quarterly basis? How much by value terms?
Value terms, I can get back to you on that.
Right, sir. Sir, I'll join the queue again, sir. And thank you and all the best.
Thank you, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Manish Dhariwal from Fiducia Capital Advisors Private Limited. Please go ahead.
Thank you for this opportunity. Tusharji, request your thoughts and perspective on how the products are faring. You mentioned that the market share is improving, and you spoke about Madhya Pradesh, but I thought that Madhya Pradesh was already a leadership position for your company. And despite the inflationary scenario, you've kind of gone about reducing selling prices. So what has been the benefit out of that? So maybe in quantitative terms, if you could explain as to how the INFL positioning has changed, how the proprietary brands have changed, how in which states what has happened. So you please share some details on the sales side.
Okay. So Manishji, we have uploaded the presentation also on the same, and I'll just brief you on that also. So as you rightly said, in Madhya Pradesh we've been on the leadership position always. Okay. The main idea is that if we have to increase our sales from here on, we have to penetrate in the other states, which is slightly a tough position which we are trying to achieve. So as per the sales in number of cases, we have almost say been an increase of around almost 90% in the sale of IMFL numbers of cases. So as compared to 9 months of 24 lakh cases last year, we have already done 46 lakh cases this year. In terms of IMFL proprietary brand, 6 months if I compare, so as compared to 6 lakh cases last year, I have already done 11 lakh cases, so that is an increase of around about 87%. And IMFL licensed brand from around 7.5 lakh cases, we have done around 11.76 lakh cases. So that has been an increase of 55%. So we have already we've seen an increase in sale in Madhya Pradesh substantially out of all this, and now we are trying to penetrate into other states.
So all these, the sales that you've shared about, the details that you shared is all Madhya Pradesh. What about the other states?
Primarily, and IMFL proprietary brands consist other states. So IMFL proprietary brands, the major contribution is from Madhya Pradesh and from Kerala.
So we would be very happy if you could give a little more color in terms of the breakups. And okay, how much is MP contributing? How much is Kerala contributing? Then in the previous calls, you have shared that you are looking at markets like UP, you are looking at markets like Delhi. Then I think also the joining markets to Madhya Pradesh on the eastern side. So what has been the outcome of all those efforts that have been made? And how many customer touch points are you present in? Like say, so ultimately the product is a retail product, so it's available in shops. So how many shops are you available at? See, we would like to basically get a deeper dive on this because I explained to you where we are coming from. A company which used to do fantastic operating margins has suddenly completely kind of dipped, and there is this element of concern that how a very robust business with leadership profiles across products in at least the Madhya Pradesh region is kind of not resulting in the margins that were already being achieved. So actually, if you notice, this time you have increased the prices of ENA. So the commodity business is giving you better margin than your retail product, the branded product, because there you've actually reduced prices. So we are wanting to basically get a better understanding.
Definitely, I'll give you the segment-wise breakup also. So as already I've given the segment-wise breakup and state-wise breakup we can provide you. But apart from that, just to inform you that we've been able to achieve good numbers in Madhya Pradesh and Kerala. But other states, as we had discussed that in terms of UP, in terms of Delhi, in terms of West Bengal, we are in line with starting right now. So we've not been able to get the breakthrough yet because there's a severe competition also coming in from a lot of people. So we're just trying to break through in other states. So once we break through in other states, then the volume growth will happen substantially. And as you said that the margins have dropped, definitely the margins have dropped. That is primarily because of the pricing increase in the commodity price. And see, liquor is a much regulated industry. So in every state, the price increase is completely dependent on the excise commissioner level, whether he wants to give the price increase or not. So we've been trying to convince the excise authorities to give us a price increase because the grain price has increased exorbitantly. They have increased by 50%, coal price have increased by more than 50%. So that's why the margin has dropped. Irrespective of sales realization, sales increase, the margin has dropped. That is the major reason. So if you would have seen that the top line is growing substantially, is in line with our expectation, the top line growth. But the margin pressure is definitely there, which we have to agree.
So to add up to Tusharji, if we adjust the inflationary pressure in the commodity prices, more or less we'll end up the same margin profile which we used to have. So ultimately it's boiled down to how much price escalation we can get from the government authorities, regulated authorities where we are operating.
Ankitji, I think this is the first time that we are getting the opportunity of interacting with you. So that is very nice because otherwise I think Tusharji was the only one who was fronting the organization on these calls. So see, Ankitji, the point is that you are basically having a distillery. where your core competence is and bringing production efficiencies in making the best ENA available, right? Now, to improve the margins, you have decided to get into the retail side of things. But, that is not happening. So basically the whole equation or the whole this thing is kind of, getting little confusing. That is one. And secondly, we've continuously made attempts to, get into these various states. So, maybe, we are like, obviously there is competition, right? Because the competitor also wants to sell their product. So then, do you think it would be a better strategy just to be a regional player, a strong regional player, where we just kind of control the state that we are in? Meaning, how beneficial is it to make attempts and, not kind of being able to make breakthroughs?
So see, what is happening is that we've been able to, we are definitely a strong regional player on that. Plus, apart from that, see, whenever you enter a particular state, you have to see a lot of things, you have to take a lot of things into consideration. So we've been able to have a significant breakthrough in, say, Kerala market. So Kerala market, within 3 years of operation, we have achieved 7%. We are almost the 5th largest supplier there, after the big, like say USL and Radico and all. So we've been able to do a substantial breakthrough there. Plus, apart from that, the other states like which I said, Delhi, UP and all. So what happens is that when the cost price increases substantially, and you don't get that increase in the price by the government, so then it becomes difficult for a player who's coming from outside to enter into that state. Okay, though we are trying and pushing our product and trying to see what we can do best. So what we have also done is now we are also getting into, within next 2 to 3 months, we will launch a super premium brand also. So that the margins are good, and for us it's become viable to enter in any other market. So these are the major factors why the breakthrough is not happening. Otherwise, it would have happened.
So like we are also moving towards the premiumization, so that increase our margin profile and go back to what we used to have, and we should be able to see the results in next 1 or 2 quarters going forward.
So can you? So we are not aware about this this premiumization. Would you like to share some details with us?
Yeah. So we are launching a super premium gin. Okay, in the price range of, it should be depending on the markets we enter. So it will be on a premium side. And then we are going to launch a whiskey which is in the range of slightly lesser than 100 piper range, which will be a blend of malt and the spirit. So these are the 2 premium products which we are targeting to be launched in the month of in first quarter of next year.
Okay. Fantastic. And so now on the matter of this merger, now that you've got the stock exchange NOC, so what kind of timeline can we expect for this merger to come through?
So on the merger part, the stock exchanges has given their NOC to the SEBI. Now the final approval from the SEBI is pending, which we are expecting by first week of March. So once we get that, we are hopeful that we will be able to through with the NCLT and all other operational regulatory clearance in next 4 to 5 months. Post the approval from the SEBI, which we are expecting by first week of March.
And as you brought in of the merger also, so that is also one of the major reasons, because the beer company, which is doing substantially well, as one of the fastest growing company in the country. So they have been able to create the brand. So that will, post the merger, that will help associated brands also to just ride on those brands.
And make breakthrough to the other states. So we'll be able to ride the wave of beer and make breakthrough to other states which we are planning.
Okay. Can you share the details about how the other company has performed in the last quarter?
So the performance, we'll share this separately, but it's as per expectation and what the projection has been done for the purpose of valuation of the merger. So it's in line of that.
Okay. Because the exchange ratio and everything has been already finalized. So then I don't see as to why the financial performance of the company should not be shared.
So we
today as shareholders are already getting the price has come down from some very good levels to capturing the merger ratio. So that we are anyways bearing. So we should. So how is the other company faring? It's something that you would like to understand.
First quarter financial performance has already been uploaded and shared, and
Yes.
further the
So we are waiting for the approval of the SEBI. So once we get the nod from the SEBI, we'll be happy to share all the performance of the company. So that's the regulatory requirement. So once we go through this, the SEBI approval process, and then we'll start with sharing the performance of the.
Okay.
But we can give you the heads up. It is in line with the projection which we have done.
Hello. 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 Hello.
Mr. Dhariwal?
Yes.
Mr. Dhariwal may be requested to kindly rejoin the queue, please.
Oh, I got disconnected or what? Okay, sure.
No, sir. You're not disconnected. You're there connected with us.
Oh,
Thank you, sir. We have the next question from the line of Paras Botra from Ashika Group. Please go ahead.
Thanks for the opportunity. So now I also wanted to understand about Mount Everest only. Probably you won't be able to disclose much. But at the same time, directionally, if I wanted to understand, like for in quarter one, you projected that 190 crore was the revenue and the margins were way higher than what associated alcohol was at 18.45%. So how is it faring? As far as margin is concerned, it's going to be margin accretive for associated alcohol when the combined entity comes in. And is the run rate maintained what it was for the first quarter? If you can directionally share something about Mount Everest will be great.
Sirji, as per the first quarter Mount Everest details which we had given, okay, and as per the projections of the years which we have expected, so it's absolutely in line with the projections and the performance is absolutely in line. But obviously the first quarter and the second quarter cannot be the same because we are seeing a seasonal business. So first quarter is the summer season, so that is the best performing quarter and the maximum sale happens in the first quarter. And the second quarter, what happens is that post the rainy season, the sales starts to decline slightly in the beer industry per se. But the numbers, the sales and everything is in line.
And plus, as far as margin is concerned, definitely this will be a margin accretive for a consolidated entity, and we are very hopeful that this will be beneficial for the entire shareholders.
Okay, fine. So, and the second question and the last one is with regard to associated alcohol itself. When you say that you are willing to do price revision, and at the same time, if you can highlight how much time it takes for the price revision to happen, what is the general procedure like?
Botraji, every financial year you can give your price to the excise authority and then they give the approval of that price. Okay, so coming April we will try for price increase in almost all the segments in almost all the states we are operating into. But we cannot exactly say what is the price increase which we are going to get. But definitely we are expecting a price increase because everybody has given, not only us, all the industry players have given the representation across different states that the price of raw material has increased substantially. So because considering that, we think that we might get a price increase in most of the states, but to what tune we'll get is not clear yet. So from April onwards, we have to submit price in each and every state. So post-April only we will come to know.
Okay, fine. So that's all from my side. Thank you so much and all the best to the team. Yeah.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We have the next question from the line of Muthu Kumar from Fidelity Ventures. Please go ahead.
Thanks for the opportunity, sir. Am I audible, sir?
Yes, please go ahead.
Yes. So what is the CAPEX, integrated CAPEX, that is
Sorry to interrupt.
quantum for...
I'm sorry to interrupt, sir. I would request you to kindly use your handset to ask a question, sir. Your audio is not clear.
Okay. So what is the integrated CAPEX for planned for financial year 24?
So basically, the capex plan for the company has already been in place, and as for the 24, like the major capex plan which was there is setting up of a ethanol plant and setting up of a bottlery unit. So total around 150 crore is the outflow for both these two. So certain part of it which might the capex which is already pending to be paid, which might overflow in the next financial year. So these are the two major projects which is coming, for which the total outflow is around about 150 crore.
Okay, sir. Okay, fine. And any idea to have a footprint in untapped markets or in states?
So basically, we are, as said earlier also, that we are trying to enter other states also. So which we were hoping that we would be able to get a breakthrough like we have got in one or two states in terms of sale, but we've not been able to break through those regions because of certain reasons which already said earlier. But definitely we are trying to encash on the untapped market aggressively.
Okay, sir. And where do you see larger margins, whether in licensed brand or in contract manufacturing or in proprietary products?
So basically, the margins are much better in the proprietary brands, obviously, because in licensed brands we have to pay a certain amount of royalty to the person who owns the brand. So the margins get diluted there. And in terms of job work, it's just a simple job work which we are doing. So we just get a per case basis. So margins are better in our own brands. And as said earlier during our earlier conversation, con calls also, in terms of increase in the sale of our own proprietary brands. So company has been able to fulfill and is on track with the achievement of increase the sale of their own proprietary brands. And our objective, which was there earlier, to consume as much ENA as we produce in-house. So out of which we have been able to majorly achieve that. So that we can also see from the decline of the sale of ENA, because the ENA has gone more into manufacturing our own brands. So we don't have left ENA to sell. So whatever ENA is balanced, we sell that. So company is always, since last 3-4 years, have been trying to increase the sale of its own brands.
Okay, sir. Thank you. That's it, sir.
Thank you.
Thank you. Participants, you may press star 1 to ask a question. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yes, sir. Sir, regarding this Mount Everett merger issue, what would be the impact on the shareholding of promoter, and then how the shareholding is going to change, and what is the status you have confirmed, sir? I missed your point there.
So see, we have got the approval. So the stock exchanges has given their NOC to the SEBI. Now the proposal is pending with the SEBI, and once we get the approval from the SEBI, we can go ahead with the NCLT process and all. So we are expecting the SEBI NOC somewhere in first week of March. As far as promoter shareholding is concerned, post merger, the shareholding of the promoter and the promoter group will be somewhere around 82%.
Will be 82%.
Yes, 82%.
And then currently, just a second, sir. Currently, the shareholding is 58.45.
Yeah. Yes.
So there will be a significant increase in the promoters' holding.
So yes, so it's a majorly a reverse merger, because the other entity is 100% owned by the promoter group. We have proposed a safe ratio based on the valuation of independent value, and based on that we are doing the merger. So this revised shareholding is based on the swap ratio which we have confirmed earlier to the stakeholders.
Okay. Just for the sake of repetition, what is the swap ratio and what would be the resultant capital?
0.77.
Sorry, come again?
0.77. 0.77 share of the new company.
0.77 shares of new company versus?
Of the combined pie.
No, I didn't get you, sir.
So 100 shares of current associated alcohol. For that, the merged entity would be around 77 shares.
Okay. Sir, then going ahead, in order to comply with the SEBI listing norms, we need to dilute our holding from 82 to 75%, correct?
Definitely.
Yes, so we have as per SEBI norms, we will have a 1 year time to comply with that, and then based on the business requirement and all those things, we'll look into it how that needs to be done.
But 7% equity dilution is there on card once this reverse merger is done.
Yes,
so that will create
and 1 year down the line from the, or I will say 1.5 years, because 5 months will take for the merger process to
from the date of approval. 1 year.
1 year down. Yes.
Okay. And sir, for the revenue part and the profitability part of the merged entity, did you mention any figures, sir? I missed that comment also.
So we have already uploaded the presentation, and for the consolidated entity for the Q1, the figures was around revenue was around 376 crore, and EBITDA was around 57 crore for the Q1.
For Q1 or H1?
Q1.
So, but no, if for the 9 months we need the entity number, Mount Everest Breweries, how have the performance been? Do you have the numbers in hand with you?
So as
9 months revenue and EBITDA for Mount Everest.
Yeah, so as you know, mentioned in the call earlier, once we get the approval from the SEBI, we'll be able to disclose all the required numbers of Mount. So we are just awaiting the approval from the SEBI because of some regulatory issues. We cannot do that. So once we get the approval from the SEBI, which is somewhere in the first week of March, we are expecting. Once we get that, we'll give all the numbers of Mount.
Sir, as you mentioned very well that it is going to be EPS accretive for investors, but as the deal is structured, the majority of the benefit is skewed towards the promoter because of that entity being 100% owned by the promoter. So over the longer term, minority shareholders may benefit out of it, but in the near term, immediate term, it is the promoter entities who are going to gain out of it. This understanding is correct, sir?
No, it's not. So see so I'll tell you. So the ABL or associated historically, it's a more a B2B company. If you see the 70% of our revenue come from the B2B operation and 30% come from B2C operation. Whereas the other entity Mount, which is it's 70% of revenue come from B2C and 30% come from B2B. Now, it's a prudent or established fact that any B2C company will always have an upper hand because you have control over your revenue, you have a control over your profit. So now historically we have tried ABL through increase in our proprietary products, but for whatever reason we have not been able to do that the scale which we want. So this merger will help the ABL products also to move from more B2B to B2C. So this merger will help in change the DNA of the entire consolidated entity from a B2B prospect to B2C. So ultimately this will benefit all the stakeholders who are involved in the process.
Okay.
And the company management is always concerned about all the public shareholders and all the decisions are being taken based on that, and this has been done with the proper valuation and independent valuer.
Okay, and lastly, sir, then what is the current market share for Mount Everest since it is a B2C? What is their current market share and the brand name, if you could mention, which are housed under Mount Everest Breweries?
The market share of Mount Everest Breweries right now is almost 60%, and it is one of the 60%. 60% in Madhya Pradesh, and they are expanding into other states like Delhi, Chhattisgarh, UP, Assam, and other states also like West Bengal. And apart from that, to name the few brands, they've got beers in the category of Lee Mount 6000, Dabang. And recently they have launched a premium brand by the name of Stoke, which is on the premium and a craft beer sector. In that we provide lager, strong and wheat beer. And we are also into premium business, which is a keg business, which is a draught business. So in that we provide fresh beers to all the pubs and all. So we have direct connection to the customers in that.
Okay. So this will be mainly beer oriented company. Yes, sir, please.
It's one of the fastest growing beer company in the country.
Okay. So they have the entire revenue skewed towards the beer segment itself.
Yeah, only beer.
Only beer.
Only beer. And out of our total portfolio, what is the beer contribution currently in associated alcohol as of now without the merger?
Alcohol, we don't have beer.
No, we don't have beer. So this will be a new segment added altogether. And on a blended basis, what going ahead, sir? How the proportion will look like? The revenue proportion going ahead?
So almost it will be 50-50%.
50%.
Yeah.
Right. So we have also.
Apart from that, it will be a complete conglomerate. So it will have it will be the only company in the industry, listed entity, which has both beer and IMFL in its portfolio. So it becomes easier for the customers. Also for customers, it becomes a one-point shop for the purchase of any liquor product.
Correct. And now, sir, online sales for beer are also permitted. So these beer cans and all would be sold through the online platform also?
So that is only a state subject. In 1 or 2 states it's been permitted. But that's completely dependent on the state excise policies of that particular state.
Yes, sir. Lastly, coming to the state excise part, sir, in the IML business, what constitutes the taxes part? Say for a total out of the total revenue, Indian made liquor, sir, the country liquor.
So country liquor total revenue is around out of that the excise duties portion is almost around 4 to 5 times of our price, but our revenue it's not there. Excise duty is post our revenue is post the excise part. Generally, we are functioning in the areas wherever we are functioning. The excise duty is not applicable. Excise to the manufacturer. It's applicable to the retailer.
Sir, so suppose the price of the product is 100 rupees. What contributes the taxes part on a blended basis?
So
or the geography wise, yeah.
It completely depends on state to state.
State to state, okay.
Goa, it's quite less. If we consider, for example, if I give Madhya Pradesh an example, so if one product I give to the government at 100 rupees, till the customer it reaches at 500 rupees.
Okay, sir. And you have your presence in the state of West Bengal also?
We are just starting it.
So we are setting up our plant here, or we will be only doing job work? How are we? What is our preparation here?
So as per our earlier conversation also and in Concalls also, we take every state as a step-by-step process. So we believe in being we are a zero debt company, and we believe in taking conservative steps. So instead of taking over a factory or buying over and doing a capex, what we do is initial stages we are planning to supply from our existing plant, which is Madhya Pradesh. And after we see a traction and after we see a sales improvement in that particular state, we do a bottling tie-up with some bottling license holder. So they do job work for us. And if we achieve a certain scale and we see that post that instead of getting a job work done, it's viable to acquire or get a license for manufacturing, then so we look into that aspect. So it's a step-by-step process. So for example, if we are starting in West Bengal right now, so right now we'll be supplying it from Madhya Pradesh itself. And after we achieve a certain level of volumes, we will tie up, and after we achieve a certain level of volumes, we might look at acquisition or taking a license there.
Correct. And here the taxation part is higher than the state averages, as you mentioned, or for the state of West Bengal, for the country liquor aspect, are the taxes significantly higher than the other states put together? So we were seeing that 25% of the state revenue in the form of taxation is from the alcohol business. So just wanted to make sense the differentiation of the per taxes per case or per pouch, if you could give.
See, in liquor industry, every state has got its own taxes and duties and its own policies.
Yes, sir.
So, for example, in West Bengal, the taxes and duties are, I can say that, are lesser than Madhya Pradesh.
Okay.
In Karnataka, it's highest. In Goa, it's quite less, negligible almost. So it depends on state to state, but as you rightly said, that excise constitutes of a major revenue contributor to each state's economy.
Correct, sir. And lastly, sir, on the bottling part, sir, I think so we mentioned in our presentation that contract manufacturing constitute 2% for the B2B business. So,
I'm sorry, your voice is cut.
sir, in your presentation, it is mentioned that your contract manufacturing constitute 2%. So this 2% is what the bottling work we are doing for the for brands of companies like United Spirits.
This is basically only contract manufacturing. These are the brands which we are doing for Diageo. So we are doing, say, Black and White, VAT 69, then Smirnoff Vodka, then Black Dog, all the brands, Medol #1, Antiquity. So we are just bottling manufacturers for that. So that constitutes only 2% of our top line, because that straight away comes to our top line, because we are just getting a per case basis revenue in that.
Oh, okay. That means that they have the formulation and we are doing the bottling, packaging, and sending the finished product to them. That's the process.
Handing over the finished product to them.
Yeah. Okay. And what are our prospects, sir, in this segment going ahead? How are we going? It should be a very profitable segment with better visibility of revenue.
It is definitely profitable, but it does not contribute much to the top line, and definitely it contributes to the bottom line. But we are seeing an increase in the contract manufacturing business, as we are seeing an increase in a stronger partnership with Diageo.
Okay. Sir, as we see your utilization levels staying at optimum level, so whatever now benefit will percolate to the bottom line will be only on the efficiency front. So going, yeah.
And sale of premium brands.
Sale of premium brands. So, sir, going ahead, what should be a realistic understanding in terms of the improvement in the margins and hence the bottom line? Because top line part, I think so we are done. When now the new capacity, when it comes up about I think so the ethanol one will take some more time to be commissioned.
Sorry. So again, the ethanol portion is just a commodity. It would be just a commodity business. So it will not definitely give that attractive bottom line than as per the sale of our own brand. So that is the whole strategy. The whole strategy is to increase the sale of our own brand, introduce more premium brands, enter different states with the premium brands and take a higher margin of realization there. And once the merger happens, ride on the brands of beer and take an increase in the sale. So once the sale increases of the premium brands and our own brands, which gives us the maximum margin, the margin will increase substantially, and plus taking a price increase. So for example, if the price increase of commodity would not happen substantially as which has happened in last 1 year, then we would have had a decent margin as compared to the earlier margins. We would be in line with the earlier margins.
So adding to Tusharji, we want our merchant ENA to move towards our own proprietary products. So that will add up to our revenue.
So that's how you would have seen that the sale of merchant ENA has reduced. That is reduced because that amount of merchant ENA which is reduced has been consumed in our own value-added products.
Thank you, sir. The next question is from the line of Darshit Vora from Robo Capital. Please go ahead.
Hello.
Yeah, please.
Yeah, hi, am I audible? Yeah. Yeah, I just actually missed it, wherein you said the capex of 150 crores, that will be for ethanol and something you said.
So we are setting up a state-of-the-art bottling plant, which we are as per the increase in the manufacturing, contract manufacturing business we are seeing future, the sale and the contract manufacturing business increase. So we are setting up a state-of-the-art bottling plant also.
All right.
For that, there is an additional capex.
Okay. Thank you so much.
Thank you. You may press star and 1 to ask a question. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 now. Participants, you may press star and one to ask a question at this time. We have the next question from the line of Carlin Iyengar, an individual investor. Please go ahead.
Yeah, hi. Post the merger of the two companies, are we looking at a stock split of any kind? Because the liquidity in the market normally for your stock is quite low. So is there any plans for that?
So that decision we will take, post the merger happens, and then we have to, as per the SEBI regulation, we have to dilute certain stake. Post that, at that time, then we'll decide. As of now, there is no such plan.
Okay. Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and one now. Participants may press star and one to ask a question. As that was the last question for today, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you all for participating in this earning con call. I hope we were able to answer your questions satisfactorily and at the same time offer insight into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relations managers at Velorum Advisors. Thank you. Stay safe and stay healthy.
Thank you. Thank you very much.
Thank you, sir. On behalf of Velorum Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.